I want to bring in Beth Bovino, U.S. Chief Economist at S&P. Beth, good to see you here. We had not a good month for jobs here, down 701,000 jobs in the month of March. In your view, what is that consistent with in terms of U.S. GDP?
So we're expecting, first I can say that it's only going to get worse with the jobs market, given that we've seen initial claims already surging to about 10 million, and that's with another week to go before we see the April numbers. The March numbers were a bit of a surprise. We thought that would get a little bit be spared. The damage would be a little bit later. But what does that mean for GDP? We're expecting GDP to drop, the recession to be on par with the Great Recession. We're looking at a cumulative drop of close to 4%, and that's going to be in such a short period. We're talking over just largely done in just one quarter, the second quarter. And of course, it can be much worse, and that's the big concern.
And Beth Ann, what about how high the unemployment rate may go before all is said and done? How high do you think that's going to be? And then on the back end, how long might it take to bring these jobs back into the economy?
Yeah, so what we have been expecting, so that if right now we expect an April jobs number to be far worse. We're looking at well over 8 million jobs lost in April. It could be worse, and we are expecting for in total about 16.5 million jobs lost up through May. That brings the unemployment rate with those numbers at about over 13%, the highest on record. We're going back to 1948. So a huge mess. How we can expect the recovery, that's a big question. We think the fiscal stimulus that's being put in place and what the Fed is doing is helping to provide some cushion. But that fiscal stimulus, the question is, will it be effective? And that's the worry. Right now, we expect a U-shaped recovery, but it could be far worse.
Beth Ann, so April potential job loss, 8 million. I've seen forecasts near 15 million. Do you think April represents a peak in terms of job loss, or do you see an acceleration in job loss for May?
We think, we have on total, we're looking for close to 17 million jobs lost, about 16.5 million. So we don't think it's going to end in April. We're wondering, whether the United States employers, or basically the have, in a sense, kind of ripped off the Band-Aid much sooner, and maybe May won't be as bad. But I would not be surprised, given how extreme these conditions are, I would not be surprised to see 15 million for April. It wouldn't shock me in the least.
Hi, Beth Ann, it's Heidi Chung here. So we just actually got the ISM non-manufacturing index reading for the month of March, and it came out to 52.5, so well in expansion territory. I want to get your thoughts on that. Do you think it's going to get a lot worse from here? Just your thought there.
That service sentiment indicator has been up now through since it's been above expansion since 2010, early 2010, I believe. So I'm God bless them. But I am expecting to see that go down. If you take a look at those jobs numbers, as I think might have been mentioned already, about 650,000 jobs were lost or more in that March number. And we saw in those initial claims readings who's getting hit. Basically restaurants, bars, leisure, hotels. And so it's very hard to see that that stay up like that.
Yeah, you make a great point, Beth. And I just want to run through some of those numbers. Retail lost 46,000 jobs, manufacturing 18,000, and perhaps no surprise here, restaurants, hospitality industry, 417,000 jobs lost in the month of March alone. But Beth Ann, you brought up earlier how the stimulus program from the government and the Fed is going to provide some cushion. But at the end of the day, when Americans get these checks, is it going to have the intended consequence? Meaning, are they really going to go out and spend in an environment like this, especially when the country is on lockdown? Will it provide sort of the stimulus that the government is hoping for?
I think what this stimulus package, if it is indeed effective, will do is at least stop households from falling further down. Again, we know that if we even decide to take a risk and go outside in the streets, most of the restaurants, everything's largely closed except for essential services. So it's hard to see people spending that much. And I know for one, it's hard when I'm wearing sweatpants all the time in my house. Hard to me see buying that nice spring outfit for the big season. But I do think what it's going to do is going to help with households to pay the rent, to pay their electric bills, to pay all the things that keep them in their home. One worry there with that fiscal stimulus is those checks aren't going to get out soon enough.
Yeah, Beth Ann, interesting point on there on sweatpants. I'm wearing my professional joggers right now. Obviously, the camera cannot see that.
Nice guy.
The new normal from working from home. But I'm sure you're a student of history here. What does the recovery path look like for consumer confidence after a true black swan event like this?
Right now we're expecting there's two hits to both consumers' confidence and also consumer spending. You have first that lingering fear that the virus is still out there. What's going to happen in November, for example? Is there going to be a relapse? We're seeing some talk about that in other countries, and that could be a worry, keeping people from deciding to not go to the movies. Maybe do pay-per-view instead, or maybe that ordering out makes a lot more sense than going down to that restaurant, although I think everybody will want to go to the bar after this. So I think that's one factor that's going to keep spending very slow. In terms of the confidence levels, how long will it take people to get their jobs back? Is that kind of that linkage still there? Are we going to see businesses, if they're still in operation after this damaging event, are they willing to hire back the workers, or are they going to be cleaning up their balance sheets instead? So that means consumers might not be out there as one would hope.
Beth Ann, it looks like the tech bubble is popping, right? But not in the way that a lot of people expected. We see tech layoffs accelerating. The New York Times dubbed it the great unwinding. Do you think it's not the dot-com era, of course, and the bubble bursting after that, but has this pandemic, in essence, popped the tech bubble?
Well, I'm not an equity strategist. However, almost anybody could look and see how high the prices were. And so in some ways, this was in a sense that needle on the haystack that caused conditions like this for the tech bubble to finally appear. I do want to say that the other thing that the U.S. has going against it is basically that huge drop in oil prices. That also another drag on energy-related business investment. And I know that there's some talk with the Saudis and Russians to maybe try and stabilize that, but that is another hit for GDP going forward.
All right, let's leave it there. Beth Ann Bovino, U.S. Chief Economist at S&P. Appreciate your thoughts this morning.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.